Hello and welcome to another episode of Decentralounge, brought to you by GlobalStake, which is your institutional, truly decentralized bare metal staking provider. Today we're excited. We have a wonderful guest on the show, Alex Krasnow, who's a Web3 and blockchain insurance advisor for the IMA Financial Group. Alex has a great history. He's a leading voice, in the crypto community. LinkedIn advises him and acknowledges him as one of the top crypto voices on the space. And as I mentioned, he is a Web3 and blockchain insurance lead at IMA Financial Group. So his expertise in crafting insurance solutions for the dynamic realms of blockchain protocols, Metaverse platforms, Bitcoin mining, staking firms, etc., and more positions him at the forefront of mitigating on-chain risks. So he is an Ohio State University alum, and his insights will bridge the gap between institutional and retail perspectives on crypto insurance. So let's dive into things. Alex, really excited to have you on the show. Would love for you to kind of really just start from the beginning. Tell everybody kind of your story and kind of what led you up to this point in your career and why you chose to enter the blockchain space.
Yeah, awesome. Jordan, Ryan, really appreciate the time. Really excited to be on. Very brief background in insurance prior to joining the Web3 and crypto side. I worked in traditional insurance at one of the largest insurance brokers in the world, doing the real estate, the property insurance, the homeowners, very standard insurances. I think that's where most people start in any industry, and you find your niche. So this was in 2021. I happened to kind of stumble upon a Metaverse real estate event. I thought it was just real estate, ended up being Metaverse real estate. Met some really unique people, sent them some messages afterwards, just talking about where they're at from an insurance standpoint, and very quickly realized that there were very few brokers, which is what I am. I broker the insurance, carriers, or really anyone in the insurance industry really focusing on this space. But it couldn't have been more obvious to me at that time that at least it was growing. I didn't know anything about it. Couldn't tell you the first thing about blockchain on-chain risks. So that was the beginning. I joined IMA about 10 months ago. IMA is one of very few insurance brokers really spending time and resources understanding the space, building the partnerships and the relationships. So it's been a whirlwind. It's been an incredible 10 months. We insure a lot of the major Metaverse platforms, working with large layer 1, layer 2 insurance protocols, Bitcoin miners. IMA insures 7 out of 10 publicly traded US Bitcoin miners. So we really hit kind of every area of on-chain risk. What sets us apart, I think what makes us a little bit different from traditionally what people in Web3 know insurance to be, is they often hear of these on-chain risk transfer protocols. And so we are the traditional regulated alternative where we're bringing the cyber insurance, the directors and officers, the errors and emissions insurance, which are standard coverages for fintech and other industries. And we're tailoring that to cover on-chain protocols, platforms of the like. So that I think that wraps up the intro.
No, I love it. It's almost like, for lack of a better term, you're the adults kind of bringing maturity to the table with the Wild West that is the crypto space. So a quick question that I have for you. What's like one of the most common risks in the crypto space today that most people maybe not know so much about, and why insurance helps solve that problem?
Yeah, absolutely. I think the most noteworthy would be technology failure. If you're providing any type of infrastructure, whether that's a protocol, bare metal infrastructure for staking, while a lot of these companies and including GlobalStake have incredible security measures in place, there's always that 0.01%. And so an errors and emissions policy is what it's called, sometimes called a technology errors and emissions policy, would cover the technology failure. That is, I think most companies know what directors and officers is, regardless of if you're in Web3 or not, protecting the C-suites from personal financial liability. When it comes to the technology themselves, Jordan, I think you hit it on the head very well. It is the maturing. When we feel when a company is ready to get standard regulated insurance, it's a big maturation in their process, in their timeline. So that's sometimes the selling point is a little bit challenging, because a lot of people, sometimes rightfully so, are very confident in their security. My response to that is always, there's no way to guarantee that unless you have, a well-written insurance coverage in place, specifically for technology failure. That would be a technology errors and omissions policy.
Interesting. So then everybody obviously thinks of FTX, and we don't need to talk about FTX specifically, but let's just pretend another scenario like that if it was to happen. So from a retail perspective, let's step away from institutions for a second. How would insurance actually truly and realistically assist a retail customer in a scenario of that ever happening again in the future? Because with everything going on with the bankruptcy with FTX, a lot of people are paranoid to ever put their money back in exchanges. We know since then almost every exchange on planet Earth has added some type of insurance policy. So if you can explain from like a high level perspective, if this was to ever happen again, how does insurance really, at the end of the day, that type of insurance assist a retail user?
Sure. Well, I'd say it's two-part, and one, it's the marketing part, and then it's the coverage in itself. So you mentioned it. Every exchange now, if you're getting any sorts of real revenue, customers coming your way, you have insurance in place. Many of them even have their coverage listed on their website. They want to market it. They want the world to know exactly what their coverage entails. The first part on the marketing side, and this is good for the world to know, when you are going to get insurance, when an insurance policy is offered to you, that means an insurance carrier took a look at your internal security, your process, and said, yep, we're comfortable with this. We're going to be able to offer coverage. So that in itself, when you are able to get coverage as an exchange, it's a great marketing play, alone, showing that companies that are worried about risk for a living looked at you and they're in pretty good shape. So that's part one of the marketing aspect. When it comes to covering the risk itself, you can think FTX, you can think multi-chain, you can think Munchables, which just happened a few weeks ago. It comes down to crime, and most exchanges within their cyber insurance policy have a crime add-on onto them. So again, most insurance, and that's the beauty of it. When you look at exchanges, when you look at custodians, they want to be transparent, in the ethos of Web3. So a lot of the times you can see pretty in depth of kind of what they're doing, what their coverages look like.
I know we've referenced retail a couple times already, but is it specifically when we're talking about individuals, is it more of those high net worth individuals who are accredited investors that have some serious capital at play that are looking for these kinds of insurance products? I can't imagine it would be somebody like me who's just truly retail compared to what do you see in the current market with who's actually looking for these kinds of products?
Yeah, it would be businesses. It would be retail for the most part. What I can say from an individual consumer standpoint, and that was a great question. We're working on it. We're not quite there where I like to say the me's of the world, the not as high net worth individuals, very limited opportunities right now. I'll speak specifically to wallet coverage because generally when we're speaking individuals, that's usually the worry. Right now, to my understanding, there's no insurance available for an individual wallet under $500,000 in value. I hope when we put this out that someone comments that I'm wrong and shows us where to find it. I have not been proven wrong quite yet. So above 500,000, so the high net worth, we can get coverage for individual wallets. Right now, it really is, for lack of a better term, we are in the Wild West of carriers where there's a lack of, and not to get into another part of this, but where there's a lack of actuarial data that you see in homeowners, car insurance, whatever the likes, that doesn't exist. And so right now we are in an era where it's individual relationships with carriers, understanding what you're doing, and then also understanding, is there economy of scale for an insurance coverage to make sense? And so for the under 500,000, that's not quite there yet, but we're pushing it. Hopefully it won't be too much longer.
Speaking of actuaries, so out of curiosity then, how are insurance companies approaching this Web3 and Metaverse industry? Because from a objective person who really doesn't know much about crypto, the layman person just says, well, everything's probably on chain, right? We don't really need anything to do with risk. Can you kind of dive a little bit deeper and explain why it's such an obstacle, why it's such a challenge for traditional insurance companies to underwrite protocols, staking companies, what have you. Can you just kind of touch a little bit on that?
Yeah, that's an interesting question. I think I'll answer that also in two parts. The reason I believe that traditional insurance carriers are not as friendly to these risks right now is they're making, they're doing very well in their industries, and there are a lot of risks. So when you look at, to someone who has a very minimal knowledge of blockchain Web3, FTX could impact how they would view a metaverse platform. Well, things that have nothing of the likes, they hear one part crypto, they're going to shy away from everything. So we're moving past that, especially with the ETFs being approved. We're getting more traditional insurance carriers looking at it. For the most part, they're not the ones offering the best programs and the best policies. And so a lot of the times, when we work with large layer ones, large layer twos, bring them to market, a lot of the times it's, still AM Best regulated A or above carriers. So very, very well backed, but it's not the brand names. It's the ones that have a good understanding of the technology coming in, but also really want to work with you in a partnership of, we want to prepare you to be ready for insurance. We'll take a look at your system, tell you, hey, these are some tweaks you can make to maybe make this look better, and then, bring you to market after. So I think that's the big difference. Of a lot of times is very transactional right now with the larger insurance carriers, while the ones that are a little bit smaller and hungrier want to build relationships, get to know your systems, and work with you to, if you're not insurable now, work with you to get there.
I would assume the space is still relatively small. How many competitors are there really in the insurance game doing this?
So I'd say from a broker standpoint, 5 to 7, and that may be a little bit high, and that's in the world. And that may be a little bit high. From a carrier standpoint, I'd like to say in the 2 to 3 dozen range, but that is what I think is really exciting about insurance. If there are carriers, the brokers will eventually come. Their level of knowledge obviously will vary. The more carriers we have, that's just where we get more competition. We get more, young, hungry, but well-funded groups that, want to mitigate this risk, that believe in this industry. And so that's what I think is of a lot of things, one of the more exciting aspects is just the amount of carriers that have popped up in the last several years, as well as the amount of wholesale brokers. So there's brokers around the world really, really starting to be able to mitigate these risks.
Interesting. So then out of curiosity, what about for just DeFi and DAOs? Are there any innovative insurance products that you've seen that have been created or that are maybe in discussions of being created for these types of products?
So DAOs is what I'm really going to hit on, because now that you've given me a little bit of a platform, I need to use it to speak to DAOs a little bit. So a lot of times with protocols, with metaverse platforms, and I won't get into the specifics of individual ones. Usually it's a blockchain ABC Labs, blockchain ABC Foundation. Those two entities control the DAO, which operates the blockchain. So it's going to vary. So I'm speaking very generically here. I think an issue that I come across often that's really, really important is if you're the creator of a technology. So if, this blockchain protocol and this labs created the blockchain, created the DAO itself, and there is, they get hacked, they get sued, they have a lawsuit. While there's no single figure at the DAO that they can name to, they're going to the creator. So I think where I maybe tweak your question a little bit there, Jordan, I think from a liability standpoint, sometimes we see protocols, sizable protocols, believe that the liability won't get back to them because of their setup through the DAO. And I want to say from experience so far, that is very much has not been the case. And so we can cover the DAO and the entirety of the program through the entity level, so through the foundation, through the labs. But it's important to note that just because you're a few steps away doesn't rid you of all liability there.
Interesting. Are there certain geolocations or jurisdictions that you're noticing a lot of DAOs are maybe trying to, paper themselves in, if that even matters when it comes to insurance? I see a lot about Wyoming.
Yeah, I don't know from an insurance standpoint if that would have the same impact as obviously the taxes side of things. I think pretty spread out, to be honest with you.
Sorry, Ryan. I thought you had a question. I jumped in. You good? Cool. All right, Alex. Another question would be like, what do you see as kind of the future going forward for this massive bull run that we're all anticipating? Knock on wood, it actually happens. But any future developments that you anticipate in the insurance sector as it relates to blockchain and cryptocurrency?
In the insurance sector, I'd say the most exciting thing, a few exciting things. One, obviously insurance, and you say exciting, people are like, come on now, how exciting could it really be? So I'll put it with a grain of salt there a little bit. But we're starting to be able to accept insurance premium payments in crypto. And that's been really, really exciting. As I meant, some large protocols were interested in paying in their native token, which spurred the interest. And we've got some interested wholesale brokers, some interested carriers. So I think that's a huge game changer. A lot of times, as I'm sure it's just a financial not so fun to deal with when you have to change all of your crypto to fiat to send it over. So I think that's very exciting. In an area a little separate than insurance, but one that I love, so I'll speak to it too. I'm really excited about the metaverse. I know that a lot of people talk about it dying. I don't think it's been born yet. I think that there's a lot of unbelievable projects being created right now. Some like just industries and sectors that are unbelievable everywhere. And some places that I haven't seen it that I feel like it makes so much sense in schools. How interactive could that be? We're seeing a lot in medicine. The thing that I always post on LinkedIn is your local grocer is my business idea that I probably won't do. Hopefully someone sees this and takes it, where they can geolocate you. You have your headset on, you have your goggles, and you can go through your local grocery store with real-time inventory. Grab something, grab some produce, look at the nutrition facts on it, put it back, check out, get it delivered to you. So I think the way that I've envisioned this from having these conversations, which is really cool, every area in Web2 is somehow, for us Web3 fanatics, we believe it's going to evolve. And what I see the metaverse as is the evolution of social media. Your local grocer, the thing that I just mentioned, is the Web3 to DoorDash's the Web2. And I see a lot of different areas of that. So I'm excited about the metaverse. There's a few that I'm very fortunate to help out on the insurance end that should be coming out in the next year to 18 months. So that's my message to the world is don't sleep on the metaverse. It is very much still alive.
I have to ask and just kind of extrapolate what you were talking about there, Alex. Do you see a world in which with the, let's say the metaverse emerges as you're kind of speculating here, would we have differentiated sort of insurance products for, let's say you had a beachside mansion in the metaverse and somehow that's an NFT that gets stolen from your wallet? Could it then be like some insurance product to cover that so it could get replaced or something like, it seems like sky's the limit when you really put it this way.
Yeah, no, great question. So I wouldn't say necessarily there's going to be a need for new products. And that was my first thought, the exact same when I started getting into the metaverse. We can create traditional products to cover these on-chain risks. So we insure several of the large players on the metaverse side. We can again tailor the cyber insurance, the technology. Intellectual property is a big coverage liability when it comes to metaverse risk. So I think that the coverages themselves will stay the same. I believe that the medium to which we'll get insurance in place will change. And I'm not sure how that will look like. We're working on a few different things right now. It'd be pretty cool if any transaction within the metaverse could be, an airline insurance. How you can buy insurance to cover your trip the same way that you can cover purchasing something via the metaverse. So yeah, I think that's probably the best way. Same policies, different process.
I guess to the best of your knowledge to be able to answer this, but how do property rights work right now in the metaverse when it comes to insurance? Because you're talking a lot about theft, but let's just fast forward and say it's Ready Player One and I own a bunch of virtual gaming assets. If somebody was to steal my gaming assets, like what exactly is that and how does it play there?
Yeah, it's a little bit challenging because I think your example may be more attuned to like a cyber crime coverage. If someone, hacks your account and takes your assets, the intellectual property, and I'm going to shout out Garrett Droege, who's the head of digital risk at IMA, gives me some great examples here. So I'm gonna quote him word for word. His example is, I create, I purchase land in ABC Metaverse and I want to create an experience. I want to create the I hate Elon Musk experience. So I put everything, all of this Elon Musk face. We talk about Tesla, we talk about X. I like Elon, so don't this isn't me bashing on you. But that is where the IP protection would potentially come in place. Or if I go, I create my experience and I put, a Nike logo up, and that there's some issues there. So I think it's more in the creation of the experiences is where the intellectual property would come into play. When it actually comes to me losing my assets, that would be more cyber crime for the platforms themselves, because we're seeing a lot of metaverse infrastructure providers. So if you're creating your own metaverse and there's an intellectual property claim through someone who created on it, it's important for the metaverse itself to have that coverage. Though, the best way that we describe this is, if I'm filing a lawsuit, I'm not naming one person and just hoping that it's the right one. I will name everyone in the lawsuit and let the courts figure it out. So you can have no liability at all. You could have done everything right, had the correct guidelines in place, still have that insurance in place just to pay those legal fees for those claims that don't end up being your fault.
Fascinating. Interesting. Okay. So then last question on the metaverse would be, how do you personally define the metaverse? Because a lot of people that are listening right now are probably thinking, are you talking about that horribly tacky thing that Meta Facebook is trying to do with people that look like they're from a 1990s cartoon? Or are you talking about what Apple's trying to create? Or is it some type of a mix between the two?
I think that my most simple way of describing the metaverse is the evolution of social media. That's really the way that I see it. In the easiest way, and there's so much more, how much more immersive would a podcast feel if it felt like we were sitting at the same table as you versus, we're pretty engaging, but it would be a little bit more if it felt like we were really there. And so that's where I see the real evolution. I describe it sometimes. I post on LinkedIn a lot. When we think of Web 1 being you can the search engine essentially, Web 2 being the interactive, and Web 3 being the immersive. And so I can't fully understand how that will entail, because I think we're a few years behind from a technology standpoint. Like when I see these the headsets, I think they're unbelievably cool. If I were to buy one, I've always thought this, I would never take it out of the box, because I see it as the same as the phones, those big clunky phones were in the 1990s. I see it the exact same way. I think in the future, and probably won't be too long, there'll be glasses or even potentially contacts that could act as we live in an immersive world where it's not, everyone's neck hurts now because we're looking down at our phones all the time, where I think there's a huge evolution in that. And so who knows how that's going to kind of evolve, but I think the easiest way to think of it is that social media. Think about the apps on your phone and think about how, would an immersive experience improve that? And hopefully I can say this and someone will have a business idea and create something. But DoorDash is my example that I give. I think that's a great one, but I don't think there's any application, any social media site that would have a worse experience from being more immersive. And that's what I think the metaverse will do.
Oh, so you got me pumped up. Can't wait for that.
Great.
Well, thanks so much for your time today. To wrap things up, for anybody that's listening, we have a lot of protocols, institutional clients, et cetera, exchanges, custodians. How would they reach out to IMA Financial Group and you, and to discuss further any type of insurance policy?
Yeah, feel free to reach out to me. LinkedIn, I can, add my email, add my contact, either, in the comments or in the post below this. alex.krasnow@imacorp.com. I'll add that on there. But I'm also very active on LinkedIn. I'm on all day, every day. So if you see me, feel free to comment on a post. I love kind of hearing how I'm right or how I'm wrong. It definitely helps kind of improve my thought process as we kind of all figure this industry out together. I'll put my contact and everything on this post though.
Fantastic. Thanks, Alex. We appreciate you. We appreciate what IMA Financial Group is doing, and all of you and your peers in the industry. Keep pressing things forward and leading from the charge. And for anybody listening, please go follow and interact with Alex. Thank you all for listening. Alex, thank you for being on, and we will see you all on another episode of Decentral Lounge.